Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Tuesday, August 13th, 2013. Well, a fairly large black bodied candle today, a candle with a lower high but a higher low. In terms of the trend, the uptrend remains in force because we haven't had the opposite configuration of trend that we had previously. To change the trend, we would require the market to make a lower high and a lower low, but we haven't seen that. In bar chart terms, this is an inside day, and it's a day that suggests some indecision in this market. It suggests that the buyers certainly aren't as strong as they previously were in terms of being unable to take out the previous high and continue that configuration of highs and lows, so there is some weakness in this market. Also, we have a black body candle, and we have seen momentum swing back to the sellers in net terms. With this black body, it means that the sellers have made a decent amount of net bearish progress on the day between the open and the close, and the sellers have managed to close the market down towards the lows, suggesting that they've closed with fairly strong control on the trading day, as opposed to the control that the buyers had for the previous trading day. So all of this is suggesting that there could be a possible change of trend, and if we look at this current candle as it's developing, it looks likely that we will see that change of trend, and we already do have a lower high and a lower low, but that candle hasn't finished trading yet, so let's be aware of that. Obviously, if this market continues trading down, we should see very solid support around the 1309 level. In the recent past, it held as strong support, and then down to around the round number 1300 we should have solid support as well. And we also have the Kijun-sen trading just down below there around 1295, and just above the 1300 level, near that 1309 level around 1308, we have the Tenkan-sen trading, so very solid support in a large zone extending down to around the 1295 level. We also have the market trading within the cloud, so we could see support anywhere down to the lower extreme of the cloud, down around the 1266, 1265 level. Now, if you recall, for the previous day's trading, I suggested that we may have had potential for a false breakout above the cloud, and the breakout above the cloud was a bullish signal in terms of Ichimoku, and we did have a bullish market in that long-term time frame. But if you recall, I suggested that very often we can have a false breakout from a flat part of the cloud, and that's exactly what's happened here today. We haven't seen any follow through, and even though the buyers had control of the market, we did see some selling pressure come in as the market was testing to higher levels. Closed with a fairly solid bullish candle, but we wanted to see that follow through, and today we've seen bearishness come into the market, so it certainly has negated the bullishness that we saw for the previous day's trading and that bullish signal. For tomorrow's trading, we would like to see more bullish activity back up around the top of the cloud and a breakout up above, and then, as I've suggested, once again the cloud is flat there. If we do see that, we'd want to see a bullish candle and then follow through, and it's not likely the way this current candle is developing that we will see that. Anything can happen. We could see this market trade back up to the 1329 level and towards the top of the cloud, so let's not preempt the market, but certainly we do have to be wary of any potential breakouts from flat areas of the cloud. In terms of the Fibonacci extension, we're examining the relationship of the current first time frame uptrend that the market's in to the previous time the market's trending up, and here we're not really getting any solid clues here. We did see the market break out just above the 161.8% level for the previous day. We are seeing very strong rejection now, suggesting that that has been a strong level, but really the market tested a fair way through there and was trading on its way up to the 261.8% level. If we don't have a confirmation of a change of trend to the downside, and we do see a bullish breakout up above the 161.8% level and the breakout above the top of the cloud, and follow through, then certainly the 261.8% would be the target, but it certainly doesn't seem as though we will see the market trading up to that level within this current first time frame trend that the market is in, and that's to the upside, and there is good potential, as I've mentioned, for a change of trend to the downside. In terms of the Fibonacci retracement, another similar situation where we're not really getting any clues from this Fibonacci retracement. There is potential for the market to test up to the 161.8% level. That coincides with this swing high, and obviously that will be a strong level around 1350 if the buyers do come back into this market and rally the market up above the top of the cloud in a bullish manner, but we really shouldn't be concerned with that at the moment, as we are seeing some solid bearishness in the short-term time frame. Now, in terms of Ichimoku, obviously a neutral market in big picture terms, and a change of sentiment in the long-term bias, with the market now trading back within the cloud, so uncertainty once again in that long-term time frame. The market is still, however, maintaining price action up above the Kijun Sen and the Tenkan Sen, so a bullish market in the medium and fast-term time frames, and we do have some solid upside momentum with the Chiká span trading above the corresponding price action, and that's confirming what we're seeing in the short-term and medium-term time frame, and suggesting that if we do see some strong bullish activity, we could see follow-through and the market test to 1350 or beyond. So let's be aware that we do have that momentum in the market in that higher time frame. But certainly we do need to watch this current low, and already we are seeing a potential lower high and lower low, but I suggest that 1309 may be an area of very strong support for this market, and then down to around the 1300 level. But let's also be wary of any possible breakout above the top of a flat part of the cloud.